Hello, everybody. It's great to be here one more time today. My name is Gary Fowler. I'm the CEO, president, founder of GSD Get You Done Venture Studios, a premier AI and quantum venture studio located in the heart of Silicon Valley. I'm a 17-time serial entrepreneur with several unicorns under the belt. I was on the original management team of Click Software, which is sold to Salesforce for $1.35 billion, and also Eva.ai, an AI HR tech company. By the way, that stands for Your Virtual Assistant, an AI HR tech company I co-founded with Dr. David Yang. We believe at GSD that intellectual capacity evenly spread, but opportunities are not. Today in GSD, we have 185 companies inside of our portfolio, representing 73 countries around the world. And with that, I'd like to welcome each of you at GSD Presents Top Global Startups, where I bring the founders, visionaries, and operators who are not just building companies, but reshaping entire industries. My conversation today is at the intersection of finance, technology, and global transformation, because we're diving into the great rewiring, the rebuilding, the architecture of modern money. Because let's be honest, what we've called money for the last 100 years is being fundamentally defined, from crypto and stablecoins to tokenized assets and programmable finance. We're watching the entire financial system evolve from something slow, fragmenting, and opaque into something real-time, borderless, and API-driven. And joining me today is someone building the infrastructure powering that shift. Edward Woodford is the founder and CEO of Zero Hash, a company quietly becoming one of the most important back-end engines in modern finance. With over 6 million customers across 140 plus countries, Zero Hash powers major platforms that include Interactive Brokers, Morgan Stanley, Franklin Templeton, Stripe, WorldPay, and more, enabling them to launch crypto trading, payments, and tokenization without touching the complexity underneath. In other words, if the financial system is being rebuilt, Edward is laying the rails. So with that, I'd like to introduce Edward. Hi, Edward.
Hey, thanks for the introduction.
So when you say you're rewiring money, what does that actually mean at a systems level, and why is it happening now?
Yeah, so when we talk about money, I think we're talking about the ability to move value globally, instantly, real time, and at low cost. And sometimes I give the analogy that information, the ability to communicate now is effectively close to zero and truly global. What Andreessen Horowitz has termed the WhatsApp moment. And so what isn't freely transferable cheaply and in a global fashion is money, transfer value. And so, a very real example of that is, we have a global workforce, but actually paying people in certain parts of the world is much more costly and takes much more time. And so stable coins can effectively rewire the way that value is transferred globally.
So, if you look at it, or we go down through, and as you're building this company, by the way, how did you get to MIT, and what made you take the jump from MIT to tokenization to building WorldPay?
Yeah, so really, my journey went to MIT. I think it's one of those places where you really rethink what you want to do and how you want to lead your life. And for me, it was really kind of questioning and kind of what I wanted to do. And also, frankly, you got a lot of advantages, right? This is actually my second startup. My first startup founded that out of MIT. And, there's a moment whereby we raised $8 million and we knew nothing about what we were doing. And so we were really, really fortunate. And did that for 2 years. We were lucky we sold the business and then moved on to Zero Hash in 2017. And really what I've always been focused on and what I've really been passionate about is technologies where people have self-selected out. I bought my first Bitcoin in 2015 at the MIT bookstore. And for me, I really think—
How much was it at that time?
I think it was like $350.
Oh, that's great.
Yeah. And so, I really view Bitcoin and, blockchains are really a transfer mechanism. People view them as—
Can I ask you a question, Edward? I had the head of the quantum lab at Harvard on the show, Pranea. And here's the thing, and I'm a bit concerned about it, and I just want your opinion. So when I take the AI, like these multi-agent LLMs, and I put them on top of quantum computers, there's a high probability of cracking Bitcoin, really, from my perspective. And I'm really concerned about it because I'm not sure we really, not I don't think there are many people understand what the power that's happening. For instance, the quantum computers these are real statistics, right? 100 million times faster, which would mean what would take 10,000 years, taking us 200 seconds right now.
Yeah.
So what happens? Like, seriously, this is like concerning, because my concern is that, you're going to have these nefarious individuals get access to these computers, or nefarious countries, and do that. And it'll take one shot before the whole market goes sideways, in my opinion.
Yep. So look, I think we're much closer to quantum than most people think. I agree with you.
The wealthy families in one of the European countries are actually doing some quantum computers right now. And I know directly they're wanted to do something. Bless you. Bless you.
Yes, look, we're close. And I think it's really being quantum ready is kind of a question that every blockchain must address, not in the long term, but actually in the short term. Actually, this morning I was just reading about, for example, Solana's post-quantum readiness. And effectively, how do you have a post-quantum digital signature that can be used in a blockchain use case? And they've come up with this term for effectively post-quantum readiness for Solana, which they're calling Falcon. So look, I think the core point around blockchains is that these are living and breathing.
But I'm not sure how I don't know how they're going to be ready for it. Honestly, I don't think they know what they don't know, in my opinion, right? Just in my opinion.
I think so. Any cryptographic mechanism, you need to think about quantum, right? In the way that we secure anything, right? Whether it be nuclear codes, whether it be the way that communications works. So I think really quantum is something that we're thinking through much more closely. Obviously, things in the cybersecurity space switch, right? We've obviously got a big topic right now. I think quantum, whether it's linked or not, I think is somewhat of a separate topic. I do think that it shows how quickly we can go from effectively zero to a perception of high threat. And I think it changes the way that people need to think about cybersecurity more generally, right?
Yeah, across the board for everything, actually.
Across the board. So I think there's a across the board element that us as a company, especially in a company that relies on cryptography, has to think through. And we're already implementing being quantum proofed throughout the entire stack that we have. Now that is separate from the blockchains. And so blockchains, I sometimes loosely describe them as Tamagotchis. And so actually blockchains, the fact that these are living and breathing and upgrades are continuously pushed, actually the ability to make them quantum proof is important. Now, what is different with blockchains is that most blockchains, every transaction is public. So there's actually not this fear and threat where you're seeing in communications where, yes, everything after a certain date can be quantum proof, but everything before that date is non-quantum proofed. And therefore all communications before that date will become public. So actually, I think blockchains are actually very well positioned because most blockchains are completely public in terms of the communication that's existed on those networks. So there's not that threat of pre-quantum, these things aren't public. Post-quantum, I do think we're getting there. And there's obviously been huge investment by Solana, Bitcoin, Ethereum to effectively upgrade the living and breathing source code that are these things, right? If you look at the Bitcoin source code 12 years ago, it's different. So there is certainly an ability to kind of upgrade to being quantum proofed. And I think that's really, really important. And something that is an active discussion right now at every major foundation at different blockchains. Different blockchains are moving at different speeds, but actually this is a differentiator for different blockchains, right? You look at TPS as one differentiator. Now, how are they approaching quantum is also another differentiator that institutions need to think about.
No, I got it. So it's interesting because my AI is going down through and starting to write stuff up based on our conversation. It's quite interesting. I'll share it with you later.
Awesome.
And by the way, she's writing these questions as we speak, just because she's curious. So most people focus quantum assets, but you're focused on infrastructure. Why is the infrastructure the real power layer in the transformation?
Yeah, so look, I think when people talk about technological revolutions, people often think them as 0 to 1. I think that it actually is a much more it's less of a binary switch. These things take time and they coexist with existing technology stacks. And actually a lot of technology stacks still exist, right? I can still send a letter, but I can also send an email. I can also send a text message. And so where we really like to live and breathe is the infrastructure around this, bringing existing incumbents into this technology and then allowing new startups to exist. We think we're very good at B2B2C infrastructure. We're less good at direct to consumer. And so we like the infrastructure play. That's where we think we're good. Secondly, sometimes I say this, is that we have B2B cost structures with a B2C revenue structure. So from just a pure play building a business perspective, it's a very attractive margin model. 85, 90% margins is what we have as a business. And so when we talk about what does infrastructure mean, effectively what we're doing is we're abstracting away the complexity of moving things on chain, right? Cryptographically signing these, paying for the network fees, etc. We're abstracting away the complexity and the regulatory implications that there is. And so that's what we mean by infrastructure, is making it really, really easy to innovate in a trusted way. That's what we describe infrastructure as being.
Okay, so she just said to me, so ask Edward. So she said that you're enabling companies to build without touching complexity. So what are the biggest hidden complexities most companies underestimate?
Great question. I'm glad that you gave her the citation as opposed to yourself. Look, the complexity exists in a number of different ways. And so just to give you one example. So one of the most well-known stable coins is USDC. USDC is actually fragmented across 30 plus different blockchains, which means that if I have USDC on Ethereum and you have USDC on Polygon, these are two separate ledgers that can't effectively reconcile. And so there's two things that need to happen if I'm to send you USDC on one chain and you have another chain. One, I need to actually pay for gas and send that on chain. And so there's a cryptographic mechanism of signing the transaction. There's a need to pay a fee in the native gas token. And then secondly, you then need to create the interoperability between the chains, i.e. such that you receive the stable coin in which you need to receive it in. So that is the technical complexity that exists, is around interoperability and around actually the sign-in and native payment on chain. So that's the technical abstraction. That's the technical abstraction that we do. Now, what we also do is usability. So you can solve the technical challenge, and we actually, have spent about 7 or 8 years solving these very complex technical things at scale, right? What we've spent the last year doing in particular is solving the usability challenge. This concept that Gary and Edward are going to consider and ask the question, hey, Gary, I owe you money, and I'm going to talk to you about what chain am I sending this on, is just an insane proposition in terms of how money movement will exist in the future. So there's these massive frictions from a usability perspective, and yet stablecoins have grown. So what does that tell you? There's massive value proposition that can exist. So what we've built on the UX side is the ability effectively for an account-to-account movement, abstracting away the distinction between chains and assets. And so think of like the open banking of stablecoins is what we've also built from an infrastructure perspective, allowing me as a user to not think in terms of chains or assets, but in terms of, hey, I'm moving money from, for example, my Interactive Brokers account to my Kalshi account, or from my Gusto account to my Revolut account. That's the way that consumers think about money movement, and that's what we're effectively mirroring in the stablecoin and crypto landscape.
Tokenization is one of the most talked about trends.
Yeah.
What's real versus hype? I mean, we've seen all these, we saw these trends take place, and we were doing taking pictures and tokenizing them and making a lot of money, right? But what's real now, and what do we have to be concerned about, quite frankly?
So I think when we talk about tokenization, obviously you're referring to NFTs, the ability to put anything on chain.
Yeah, exactly. And they were, I saw people do a doodle and they sold it for $300,000, and I'm like, it was insane, actually.
Yeah. So if you take away, obviously, like any technological hype cycle, there's these hype cycles, and there's a lot of technology that's applied to kind of silly things in hindsight. But what I think that the NFT craze, as we call it in hindsight, is it showed how easy it was to distribute things on chain, right? Literally anyone with a phone can now access actual ownership, right, of things. So if you actually think about the kind of the evolution of the internet, right, the ability to read was kind of what people view as Web 1. Web 2 was effectively to be able to read, write, right? I could push things on chain, and that added and created huge amounts of value, right? We effectively live in a content world now. And then Web3, which is effectively an anachronistic term now, but really what the vision was the ability to own on the internet. And I prefer to not just call it own, but it's move, transact, move value. So look, the NFT craze or fan craze, whatever you want to call it, what I think it really showed was kind of the first early innings of being able to own things on the internet and the ability to transfer ownership instantly, globally, to literally anyone that had a phone.
Yeah, you know what it did? You know what it did for me, Edward? It made me think that Dutch tulips never died.
Yeah, look, this is something.
I mean, don't you think? Come on, like some of the garbage, it was like it was ludicrous, like ludicrous.
Look,
and I know you're talking about the infrastructure and all that, and show the system work, but the stuff they were doing, come on.
But I don't look. I was not talking. I am not a big NFT holder. You know, but I effectively was trying to just show that there was a real application here, and you can look at this in any technology. Right?
If we go down through from a real application and tools to be able to build it, that's right. Yeah. It's just people got a little bit, you know, they were hanging out and buying tulips too long.
So let's evolve this conversation to where now is tokenization. And so tokenization, if you think of stablecoins, which I think is unavoidable and very, very clear how powerful stablecoins have been. If you look at the data, you're now seeing more volume on stablecoins than Visa and MasterCard. And I've given you some of the challenges that exist still in this space. There is real volume for tokenized money, effectively, right? And then when you look at kind of what you call real world assets or tokenized equities, you're seeing every large financial services company in the world, you know, some of our customers, BlackRock, Franklin Templeton. If you look at the evolution in the traditional equity space, NYSE, NASDAQ, DCCC, all making massive movements in tokenization. So tokenization is a real thing. Now, why does tokenization exist? Tokenization effectively gives, it creates just a much better global ledger of transfer of value. And what that means is that effectively you can reduce intermediaries, you can reduce costs, and you can effectively transfer value globally more quickly and instantly. The one mistake that I think most people make about tokenization is that they view tokenization as a one-way door, right? This is a tokenized dollar, and therefore it always remain a tokenized dollar. I fundamentally don't agree with that. And so the way I kind of view the way the world's going to go with tokenized dollars is that dollars will become tokenized when they need to move, what I call money in motion. But money at rest, for most people, just holding a dollar or holding a yield-bearing instrument is objectively just better. And so I think that the way people should think about tokenization is where it makes sense for it to be tokenized, it will be. And when it doesn't, these things can be de-tokenized. And so really the way I think about tokenization is it's a rail, it's a mechanism of transfer value. It can also be a mechanism at rest, but really for me, the big value proposition of tokenized dollars or tokenized equities or tokenized anything is the ability to transfer, prove ownership in a more decentralized and global way.
Okay, so does that fundamentally change liquidity or just move it around?
I mean, in theory, it should increase liquidity in the sense of you have a instant global marketplace. I mean, in terms of the equities landscape, we're obviously in very, very early innings of what it means to be in the equity space. For example, tokenized share. What does that actually mean? What is the benefit? And then also you've got to be conscious of the current market dynamics, right? When we talk about blockchains, often you think about disintermediation. How does that exist in what is largely in a regulated world, a largely intermediated space? How does that exist? And then how do the intermediaries play in a world where you're using a disintermediating technology? So I don't believe in a world that would be completely disintermediated. I think that there will be some vertical integration and there'll be disintermediation. It doesn't mean it's a binary construct of everything and disintermediated. And so when you actually talk candidly with some of the people that are doing this, they view this as a way to increase their opportunity, not purely as a defensive mechanism. And I think that's really, really interesting. But you know, it's not just the technology, right? There's a lot of other factors to play, especially in the equities world, which is how did the regulators think about this? And the SEC has put out a ton of guidance recently in the last year, which has encouraged tokenization to exist. And that has been primarily by saying that they view tokenization as effectively a digital ledger that is no different to an Excel sheet. And so that's a really powerful statement that this is it doesn't change the underlying. Now, in terms of what that means for market structure, I think we're still very, very early. But I would say that it's right now there's this dynamic of what does it mean for intermediation? What does it mean for all these different players? And you can look at that in any tokenized space. If you look at tokenized dollars, it's the same question that banks are asking themselves, networks are asking themselves, correspondent banks are asking themselves, networks are asking themselves. And so people are using this as an opportunity, to some degree, to also grow their market opportunity and actually expand their services.
You operate globally across 140 plus countries. So I got a couple of things. How do you navigate the regulatory fragmentation? Because it's all different. And, one thing's good here may not be good there. So that's door number one. And then on top of that, what about trust? How does it look like in a world where money's programmable?
Yeah. So to your first question, the largest team at Zero Hash, other than tech, is legal and compliance. So if you look at what we provide people, it's two core services: technical abstraction and regulatory abstraction. So it's complex to do it size and to do it well. But regulation is a building block of trust, right? Especially when you're working with some of the largest global enterprises and largest global FIs. Now, on your question of programmability, I think that's a great question around what does programmability of money actually mean and why is it valuable, right? So we can talk all day about why programmability of money is important, but I would maybe just go, a little bit more on the edge of where we are today, and I think where we can position this, especially since we've been talking a lot about AI before we got on live. If you think about how agents are going to work, I think it's going to fundamentally change the way that content and the value of content drives value. So today, largely, content online is largely driven by ads and referrals. Right? I go to Google, I type something, I click on a link that drives revenue for the creator. In a AI world, that's just not going to exist, right? The website creator is not going to get paid for links and not going to get paid for ads because I'm not going to the website. And so I think we're going to live in a pretty complex dynamic around how content creators get paid. Now, this is something that has been solved, for example, with music. Spotify pays creators, just a different form of creator, based on minutes streamed. So if you believe in a world where AI relies on content creators, I think there's going to be a need for effectively a transfer of data for value. And bear in mind, we're going to live in a world of billions of agents, globally, fragmented and disintermediated. How does that actually work? So very, very simply, if your AI agent, Gary, wanted to, for example, get something from the Harvard Business Review, I believe in a world where Harvard Business will charge a small fee to your agent and will basically DVP settle the content for the money. And the only way to do that for an agent-to-agent transfer is with programmable money. So effectively, Gary pays HBS a fraction of a cent for something. And I think that's really, really important. And that's going to exist with billions of agents, billions of content creators, the amount of permutations. That's exactly where a global rail matters or a programmable rail matters. And that's exactly where stablecoins fit in. And so programmability of money basically allows for there not to be intermediaries. And that can sometimes be perceived as negative. It actually is a massive value accretion. Who's going to sit in the middle between HBS and Gary and the number of permutations that will exist in a global way? It's nearly impossible. So that's where smart contracts with the ability to programmably transfer data for money is an unbelievable unlock for AI.
Do you think banks are going to exist in their current form 15 years from now?
I think banks will exist, premise one. I think like all businesses, they'll adapt and change. But if you look at effectively the legislation that exists here in the US around, for example, the Genius Act that was passed last year, it requires stablecoin issuers to effectively become, to get bank charters regulated by the OCC. So yes, I do believe banks will exist. I do think there's always an interesting dynamic. You're seeing this today in the discussion. The big hot topic in this space right now is whether or not stablecoins can be yield bearing. And there's this big discussion about what that does for tokenized deposits or not. But I do believe in a world where banks, all of them, will adopt this technology the same way that they've all become digital native as well. And I do truly believe that. And we're working with multiple banks today. And I believe in the next 2 years, every globally systemically important bank will be actually using this technology every single day in a very meaningful way.
Interesting. Listen, we're coming up to the top of the show. We went through a lot of topics today. It's quite interesting. And so closing thoughts, and how do people get a hold of you? And if you want to stay on for a few minutes after the show, we can talk.
That'd be great. Yeah, so you can follow us on Zero Hash on LinkedIn, or Zero Hash X on X. And if you have any thoughts, my email is very simple, edward@zerohash.com.
I appreciate you taking time out of your busy schedule. And I thank all of you for joining one more time. GSD presents Silicon Valley AI and Tech. It's not about the talk, it's about the action. Stay happy, stay safe, and stay healthy. I'll be back to you again soon with another exciting edition. Thank you.